Yeah, so I've probably done the news trade setup before in a video, or maybe even more than one. But I think I have some more details and clarity, and perhaps we can make it simpler as well. So I'm gonna look here. We are on yesterday on Wednesday the 18th at 2 o'clock New York time and 8 o'clock Central European time. So we're on this candle. So I normally use 10 minutes for my intraday short term, but I also go down to the 1 minute for these events. But I mark on the, usually I'd suggest to mark on the first 15-minute candle at the event. And I'm in replay mode now, so we're at this time yesterday. So I mark off the high and the low of the first 15-minute candle. And this is gonna move really fast, like maybe the first minute or so on both sides. So 15 minutes is a really good compromise of time. I often use 10 minutes because that's what I use, and they are often pretty close. I noticed on this one it's almost the same. I think on the US 500 it's a bit different on the low. Just a few it's very tiny. Let's look at the 10 minute here. It's there and there. And then if we go to the 15 minute, I think it was a bit lower. Now I can't see. Yeah, it was a bit lower. It's very similar actually. Sometimes there's a difference. So either 10 or 15 minutes, let's say. So we're here, we mark off the level, and then, actually I did trade on a 10 minute, because I had so many things, I looked at so many things, I didn't want to switch too many times. But I could suggest that you mark off daily levels, etc. And then you go down to maybe you have the 10 or 15 minute on one part. So maybe you have two charts like this. You maybe take the 10, 15 here and the 1 minute here, or the other way around. But I'm normally on my smaller screens. If I am on a laptop, which I like to trade from sometimes. Not yesterday though, then I had the full screens, many screens set up. I digress. So let's look at the 1 minute here. And so I marked off the levels, and then if you want to, I probably didn't, but you can use the fib tool to, okay, now we can't see it. Let's go back to the 10 minute. So the fib tool to see where 50% is, and maybe you also want to have like 1/3, or like these are the ones are the main ones for most people. 61.8%, 78.6%. This one is not as common as this. I do like the 50%. So for this trade, 50% is important. So you don't really have to have this one on. What you can do instead is just measure, use the measuring tool in your app, and then do half of the full range. So in this app, you would just click Shift on the PC and click once, click and then drag it. And you see it's around 120. And then you just go down to half of that, 160, 0.60. So this is around half, well, we can see it. But then you're like, oh, this is around half. Maybe you mark that level, whatever. You don't really have to have this one on, but let's keep it. Okay, so let's go down to the 1 minute. And okay, the trade is without bias. You trade with the algos each time it comes down or below to the low or high and comes back up, right? So each time it does that, you can trade. So the first one you can't. So this one is actually, so here we marked it. So it has to come up here again in order for us to be able to trade in this system. So there's no trade here. So let's continue a bit forward. Now we're playing it. So let's see if I can pause it. So here, let me turn off that because that's actually marked on 10 minutes. So let me continue. We don't have a trade yet on this one. Unless, I mean, you could have marked another level here for sure. Like this is a pretty obvious thing, but it's not within this system. So let's continue. So maybe we're going up all the way to it. Nope. Of course, you can also use the fib levels, which, I mean, you almost got that here if you want, but this is not my system. My system is simpler. We trade at the full range because this is a mean reverting trade with the algos, and we expect them to oftentimes, I'll learn not to use that word, but it happens that they come all the way down to range. So here I would probably this could probably been traded, but as we might not have an alert here and it actually didn't come down to here, it's not really within the system, but if you get very experienced, perhaps you could trade that. But now we have a signal, but we don't have the trade yet. It needs to be strong out of this as well. So you can buy an anticipation for sure. And I bought, actually this I marked after, so I may have bought on this candle, perhaps even on the next one. So I just marked here. I may actually have bought higher up, but let's just take that into consideration because I trade like leverage instruments. It's difficult to see exactly where you bought, and I also usually mark in this case I marked in TC 2000, and that's not as clear an app to show on. So I mark the principle in here to teach rather than to be super exact. Okay, so this is not ego driven, this is like teaching driven, you know. I want it to be. So here the first principle is you have a stop loss, of course. So I'd like to have a stop loss of around maximum 0.15%. Sometimes I will see that I'll show that later on in another example, that I need a higher stop, actually 0.3, but I know that already, so then my position size is going to be a bit like half of the other one, right? It's just, so here, let's go. First principle is we're going to sell half at 50%. And you can do the variation that you sell if it closes below or pulls back below. So you don't have to sell into strength. You can sell weakness below that 50% level, and the 50% is here, right? So you can see I already marked that, but let's continue anyways. So actually, whoa, it's even coming down here. So what do? You know, they say average, like good traders, is it Sanger or Livermore or whatever, losers average losers. But this is not yet a loser in my system. So here I have a signal to add. So I added here and I'm not sure there was exact this location. Often, I shouldn't use that word. I have a tendency to mark where I bought it in hindsight a bit better than it actually was executed when I do it like on feel. So maybe I bought it higher up here, or maybe even on this candle, but allow me this not for now. Principle is the same. So now we have, in my case, a doubled position And this was already a pretty large one here. And I was pretty annoyed when it came back here, I'm not gonna lie. I was thinking I'm gonna get stopped out, but I'm not gonna stop out. Because I have, okay, my stop is, let me mark my stop. It's around here. 0. You can measure 0.15%. Let's turn off that. It's a bit difficult to measure actually in TradingView like this. Maybe from here. Oh god. Okay. It's a bit higher. Somewhere around there. Maybe a bit lower than that. Here you can sell here already on this candle. I think I advise to sell on that candle. I think I missed that sell. And instead I sold there. And maybe actually a bit lower, let's be honest. So that is half. And another rule, a detailed rule, is 3 strong candles in a row, or just 3 candles in a row, I'm going to sell. And this time I wasn't biased in my marking. I think I actually sold here. But I just wanted to show that I sell when I see the 1 minute candle, third in a row, it's going to close a week. Or opposite, if we have a short position, it's going to be the reverse, right? 3 strong in a row, bullish candles in a row. And here you can also count this, it's like this, and then you get 2 and 3, but it will be the same. So you can add this to, it doesn't have to be 3 in a row, but like the main idea that you see continuous weakness for more than that's selling, right? And it's gonna usually continue all the way down then. Very, very usually and often over. It's, how do you say that in English? In this case, I think that's the right thing to say. If we see this weakness, it's gone more than not going to, like a high probability to come back to this range. Or lower. So that's why we have a sell rule. 3 candles in a row. You can sell before the close. So you can actually sell probably here or depending where it was. So that's why I marked here, because I'm not sure if it was here when I sold it. Maybe then it came up a bit. So let me mark this unbiased. So this trade would have been then okay, 0.15, let's take that. And then we go up to here, that's 0.6, so that's 3 times that, right? No, 4 times 0.15. And down here, we are about, double. So this is 2R and this is 4R. So then we have a 3R win. So we have a 3R win, but actually it's a 6R. Around 6R because I have double position. Well, still a 3R. But it's times 2. I'm not sure. It's a 3R trade, but it's doubled. So the size is doubled. Because the risk is actually doubled. Yes, it's a 3R still, but with a bigger position. And I think the expectancy is actually higher here. Okay. We have a 3R trade win, but in total it's 6R. Fuck, no, my math is off. Let's say it's a 3R. This video is getting longer than I was thinking. So we can't go long here yet because we have not reached end of range. So now we have reached end of range. Now you can like buy in anticipation, and then let's move this down lower. This one is not in play anymore. Let's delete it completely. Or maybe we can just move it away for use later. So here I mean, I guess you can buy in anticipation, but I prefer to see that it at least tries to come up above this again. So let's play that. So there it tried once. So here we can go for a second entry long. So if it goes above again, then it's a better trade. So maybe they need to get below these two pivots for this one to get more liquidity, to take out more stops, right? Because the stops are probably around, so let's move the stops here, back here. Stops are probably around here somewhere, right? 0.15, around 0.15. So all the way down here probably. And so maybe we need to actually get down here to get liquidity, right? That's how it's a broadening range, right? So the broadening range, I'm not going to mark that usually here, but I'm aware of it. So I don't have a great, because this one's fucking everything up, but let's just think of it like something like this. It needs to be lower, right? Lower than these two on the horizontal. Let's take this away because it's just like messing up everything. Let's zoom in again. And then we continue. Let's pause. So here we have some buying, right? And this is like, it only, I think it does 2 moves on a 1 minute, or for each candle. So on like live, you would have seen it move, and you would get a nervous candle, right? It's gonna flick up and down. It means there's like buying, strong buying also going on. But they took out the stops, right? And now we actually have a bigger expected value here from here. But let's be safe. We want to buy on the up line. Now it's coming back down. Maybe we can do a second entry here, which we did. And okay, now my stop could be 0.15 below this, but in this case it can be less because we already took out those, and if it's gonna work, it's gonna work, right? We're not gonna like really allow it come back way too low here, I think. But okay, let's for clarity just do, I'm having too much nuance now. Let's do 0.15 from here. Let's move this away. So from this buy point, or maybe the low, let's do 0.15. We do a bit more, God damn it. So 56 now, 0.9. Somewhere around here. And I already have a level here. So perhaps you could do something below here. It's also very, no, that's too far away. Don't do that. 0.15 it is. Let's see what happens here. And where are we in time? Oh, no. This is, so, okay. I didn't check the time. So now we're coming to end of day. And in my case, I have to buy before 21:55 because that's when my instrument close. 5 minutes before US close. So that's 3:55 US New York time. And here we have a different time. If you have a bias on the news, like a perspective on the news, which you should not have here in the algo trading, this is just follow the flow. Follow the price action, mean reverting, rules based. But here we're coming into the close, and if you think the news were actually strong, and in this case the initial move actually was the right one, if you think the news, you have to interpret the news and where we're coming from and where we are in the market and what, like, do you actually have a good argument for your perspective? If you do, you can buy. But this buy is not, this is biased buy. This is like I have a perspective buy before the close. And usually they're gonna be on the opposite side where they're going, actually. But this is like, you really need experience and intuition for this one. So I don't recommend this one. So there's two different trades, but you should be aware of the difference. This does not mean reverting anymore on the intraday. This is fading the algos, and that comes with a lot of risk. So you buy into weakness here before close, and was lucky because they took out these stops. We're looking for liquidity, which is my favorite. I love to buy the fear and the weakness or the strength in the opposite direction. I'm a better on the intraday. I'm better long because I trade that more. But I noticed I can be even better on the short side intraday, but that's not in my personality. Like I can be more effective, but my longer term thinking, what I learned is to trade long. So I really have to reimagine myself to be able to trade short. Unless I have really great rules. Okay, now I'm digressing again. So let's get back to it. So this trade is different. This trade is before close to the close. So sometimes it's actually going to move at 8, or that's a US 2 already, or maybe 3, or US and 9. European time, 9 at night, in the evening. But let's say the last half hour is most common, and actually in these cases it's usually the move actually will start after the close or after 21:55 or 3:55, because they're actually waiting for the Europeans not to be able to trade. I mean, that, let's be honest, that's what they're doing. And before, actually, these closed at 8 or even earlier, and it was almost impossible to trade these instruments because the big move comes after it closes. But here usually it says just that's why I want to buy very close into the close, as close as possible usually, and with some minutes to spare. So I like to buy around 21.50, 21.54. And I have already prepared my instruments. I already had to buy, I have the size, I have everything ready. I just want to push one button, right? So sometimes I buy more than one instrument, and I have more than one trade ready. So I just click for each one, I click one button. And usually I do it via the web browser. In Sweden, I have to do it that way. And so I have several open web browser windows, and sometimes on on each tab, and sometimes actually have more than one window, so I can just click really fast. So I have I use Firefox for execution and some other things in trading, and I use other web browsers for other things, just to I can have the same setup each time, so it's really fast. That's execution though, but which is important. I have calculated my position size. I have the order ready. I have, if I am able to put in a stop loss, which I am in one of my brokers for these instruments, I will also have that prepared, the number, and I will add that directly after, but that won't come into effect until that market opens again next morning. So here it continues. So I already bought here, so it continues. So this video is going to be long. Detailed video on how to trade news events. And then we continue. And I was like, okay, this is not great. What time is it? So close. This is probably the closing candle. You see, it's coming below. I'm turning everything off. I don't want to see this. I actually did wait 2-3 minutes to check. Then now we're closing. Now we're after close. Now the turn comes, right? It's like, this is how it is. And now they're gonna move the market up all the way up to here and above. And I can't do anything here. Like, maybe we should turn to like a 10-minute candle because this is really slow. Okay, so let's do that. Can I do that? Yeah, and let's play. So that was around half of this move. Down, pull back. This is the 5 SMA, but with not only real open times. It's all day trading included in that, so it's not the best one. I prefer to look at that on IW or SPY without extended hours. Anyhow, you see they're moving the market all the way up to this high. First they had to take out all the stops here, searching for liquidity. All the longs here, we're taking you all out. That's way too much retail money to not take. And then you have to be able to buy the fear with skill and probabilities. And I don't know. I mean, I can't be sure. So my position size is not as big here as it was here, right? It's smaller. It's pretty big, but it's way smaller. So my first, so let me show, okay. Here, around here, I think 820 or 840, my market open. I think here on this candle, so I sold here. There was something, there was something on, I think, there are levels on like several of them. So I just want to take some, especially in one account that I'm trading for another person. I took 70% on that one because I can't risk things in the same way there. And also the position was smaller on that account. And on my account I actually took 50% because why not? I thought it was going to continue, but I just want to lock in some gains to be able to hold the rest for longer. And that's a key actually, like try to hold that then. I think this is too much trading outside of US hours. They can't allow for this to be it. They have to they're probably going to take us down either halfway or all the way here and then go up again if we go up. They usually won't allow this to happen. Like, they're not gonna lose money to the outsiders trading. Like, no, we're gonna take you out, or take some of you out, and then we go back up. So then you could expect maybe 50% of this move, the whole move. Now, let's continue this actually, so we see how it plays out. Where are we? So, okay, so 57 even, and I think there was something else up there. Yeah, the full range. This is the range of a usual range up and down of this instrument, which is calculated with this indicator. This one is really good. I have one multiplier and the ATR period of 20 on this one. And offset. So it's not in the way. So if I would not... Wait. Not sure about that. But Okay, so that's why I'm thinking this might be like, you always want to sell into strength, like when these things happen, but it's actually usually better to sell into some relative weakness here. I mean, you can also check like higher, like maybe go up to 4 hour and look at the RSI, like it's getting close to overbought, and I didn't care for like these are all about like 10 minute, even 30 minutes is starting to get like really up here to the 80s, and 1 hour as well. But there's some room still in the 4 hour, but it's pretty high. 75 is even higher. And also, let's see the daily, it's not up there, but it's like all the range, usual range of the day on the ups, like long side, and it's like all of the trading range, the maximum, and it's really high up on the RSI, so maybe you can take some more off here actually. But the main, like, try to trail a part of that and sell that into some weakness. Like, yeah, it all depends. So that's the trade of the SPY, and let's just mark this trade. Am I on the wrong instrument? I think I'm on the wrong. Okay, yeah. So let's just go through this one, not like super. Like the video, like the. I'm gonna do it just in the like chart. So we mark up off the levels here, and then we go down to the 1 minute. So let's go back in time to the 1 minute. So here you will see. So this is the first minutes, and then we need 10 minutes. So here you can actually. So I probably got short here actually. Not. I just marked on the 10 minute, but I probably got short here. So here we already have the first, let me show the 10 minutes. Where are we? So the 10 minutes is where we mark the level. So here it comes down below that, right? Oh God, this is difficult to show. Okay. Was this even like, let me mark 10 minutes. Yeah, so this is later than 10 minutes. So this is a trade with a stop loss around 0.15%, right? So, now let's move somewhere around here. Let me try to do it like this. Oh, let me see. I think I might have been stopped out on this one. I don't remember. What? Okay, but this one, let's follow the principle. You probably get stopped out on this one, but maybe you should have done a second entry on this, but like, it's difficult to know. But let's say we trade this one here, and we get stopped out here if we do 0.15%. We get stopped out here, around there, so that's 1 hour loss. And then we go again here. So I'm not going to mark that now, let's move that here. So we go here again here, with a stop. So now we're going to go, now we have a level. So this one, that's going to be smaller. So we'll go 15% from there, so it's up to there. So around here is our stop for this one. You can also go just above here. But let me go here. So that's actually from my buy, it's 0. No, I had 0.3. So maybe I only went to here. 0.4. So my position size is going to be less than half of the one on SPY. This is short. So now we want to go, that one we want to take profit 50% of the range. So this is going to be messy. I'm only going to do this like this. So you can see 50% is here. So we're gonna cover 50% here. So that trade is 50% to here, and 3 strong, which we do have here. No, we don't have it. Maybe we can 1, 2, 3 it. But we also had a level here. So I think actually this is nuances, but you can actually stop out here with the rest. So we stopped off with half here, or we sold half here, and then you could actually stop out half here. But in this case, I waited for it to see if this level held. And because that level was drawn since earlier, like it's difficult to see in 1 minute, but it's drawn. Wait, no. What happened? Where is it from? I don't get it. Oh yeah, it is over here. Okay, it's from over here. I keep levels. Let's get back to 1 minute. So this is confusing now. You probably really, yeah, I did the first part better, but long. Yeah, so maybe you have to stop out here actually. Maybe. Then you could enter again here. But if you don't stop out here, which I didn't, because I waited for this. So I kept my stop here for half. And that one came almost all the way down to the range, but it didn't come down. But I actually had a level here for the monthly close, which I have, if I go to 10 minutes, I think I see. No, I have to, okay. Let me go to, on the 4 hourly, I have it visible. I only show it on the 4 hourly, so it's not in the way. But you see here, this is the monthly close. And I mark that as a level, so I only see it like this. And then I have I just write the text MCL, and I have VCL as well for weekly close, which I use more often. Always, I would say. But this is the monthly close, and I have that as a dotted line. My weekly close actually is probably this one. Yeah, you can see it out here. Let me see if I can. So I'll have that as a blue line, a straight line. Trend line, I think. Anyhow, this one, the monthly close is dotted. Where am I? So yeah, that's what I sold here actually, as it came below that. And I also think that's pretty clear level here. So I actually sold before it came down all the way to range. I could have sold better, but probably I would have sold here instead when it's come do 3 up. Like now we're on the 10-minute level. So let's go back to the, so this is actually a better rule. So normally as it didn't come down all the way to the range, but there's a lot of structure here, so you can learn to take that into consideration. I think my sell is actually here. Anyhow, wait. Or maybe it's marked on the 10 minutes, okay. No, this is, This is my sell. Oh, okay, guys, I'm really confusing you. But here we both have the monthly close, and we also have the previous day VWAP, which I have marked here. So this line is a previous day VWAP. So I sold into that because there's also a level here, right? So I sold into that. So this one I didn't sell, but you probably should have. And I probably maybe should have. Sold here, sold here. This is my main sell. Half, half. So everything is sold here. And now we're coming down here. I actually bought here. That was too early. It's 21.36. I should have waited. So this one was negative, right? But I was thinking like we're not even down here. So I'm gonna hold, we're getting so close into here. I think on one of my accounts I actually added down here around 21.50, but I'm not sure. I think I did add here as it's closing to close. And then where I can't trade from here, it went back down and I was like, oh shit, but maybe it's coming up. I'm closing my apps around here. When I'm seeing it starting to go up, I'm like, okay, I'm not gonna watch this. I'm gonna go to sleep or prepare for sleep. So then it traded all the way up. I sold here at 9, similarly very close to where I sold here. This was, yeah, I sold this one before. Then I sold this. And you see, that was a bit early, but I wanted to take some profit into strength. And it looked like this could have been, there was something here on the level. Actually up here. But I thought maybe this could be it. Because of the other ones, I think this one has some clear level, as well as this one did. Around 9. Yeah, it was above like all of these ranges. And I'm like, maybe it's gonna come back for some more. These two were not up all the way up here yet. But there were some levels here. So I sold some, and it was also around 9 when the European markets opened. I actually bought OMX here instead. I thought, yeah, I just bought it, like, it's so funny that I bought that, but sold these at the same time. But usually the OMX moves, if the US market moved, your OMX moved the same amount, more or less, as the SPY the day after. So it's like free money. Not always, but yeah, very often. There's that word again. It's high probability. Anyhow, that I think was really, and then you want to keep this and trail it. And we have news 14:30. That's 8:30 US time. So I probably want to sell most or all of it before that, because I think the US market wants to retrace this, because they can't allow Europeans and Asians have all the winnings here. That's not allowed, like it's a rule. No, it's not a rule. It's just like something that happens. So I probably, like, I really want to trail this, but I think we're coming back for more. And if not, maybe I'm locked out of that trade. But my winnings are around, yeah, I can't see. But on X trade I can see, because that's open. It's like pretty clear, and that one is up 17%. So I think it's 30 times 0.85 minus the spread, which was, I don't know, maybe 0.5%. So in total it would be I will also have to pay 0.5% for the spread when I'm selling as well. And actually twice, because no, I haven't sold this one. But if I sell it in 2 parts, I will have to pay for each time with the spread. But it's the same spread more or less. So yeah, I think that's the really long video for how to trade the news with some nuances. And to recap, mark the levels for the 15-minute bar. You trade with the algos mean reverting. If it comes, it goes above and then comes back in, you go short. You sell half at 50%. If it does 3 strong candles on the 1 minute in the row towards your position after the 50% or later, then you can close it, the whole position. Wait for the next trade. And if it comes back all the way to the low of the candle, 15-minute candle, then you can go long if it comes back in again. And you can do that in second entry or directly on the 1 minute. And same, and once you're getting closer to the close of the open market, then you can quit the mean reverting trading. And if you are an experienced trader trading for swings and overnight, then you may take a bias trade if you have one, usually opposite of how it has been moving. So that's a contrarian trade. And so you're fading the algo, and the EV goes up, expected value, if they take out the stops like this. Like they did here, like when they came lower than these two for the last one. That's even higher expected value from my studies. That's it. You can use RSI as well, but I didn't go through that. Right? It's a higher low than here, right? Anyhow, that's it. That's the video.